So today we are going to start the so okay, some questions there in the last time, no, I want to discuss with you, right? Okay, we'll take that questions. Right. So still there is some small thing remain, so we will do it next week, right? If possible, next week. Right. Now, can you answer to this? This is your March 2015 question. So I need your support, right? March 2015 Financial Clients Management. So the Financial Intelligence Unit, FIU, Sri Lanka was established under, what is the act? What's the answer? The Financial Intelligence Unit, that means FIU Sri Lanka, was established under what act? Act is? Can anybody tell me the act? What is the name of the act? Come on.
Financial Transaction Reporting.
Yes, see, but you see, this year the question, the same question came under Financial Transaction Report Act. What is the unit established? So then the answer, Financial Intelligence Unit. Okay, so what is the institution which administered the FIU? Who administered the FIU? Can anybody tell me? Simple, you know. That
Central
is
Bank.
Central Bank of Sri Lanka. Good. Okay, now this is 2015 September question, right? What is the answer for this one? This is again Financial Clients Management question. Customer due diligence is intended to, what's the correct answer? Fight money laundering, promote customer relationship, 3, reduce loan default, D, attract new customers.
Fight money laundering.
Fight money laundering. Now, customer due diligence as well as KYC are required under the law of Financial Transaction Reporting Act. You need to remember that, right? Customer due diligence and KYC comes under Financial Transaction Reporting Act. Then, of course, the customer due diligence is intended to fight money laundering. Now you see the same questions coming in March. Okay, it's not there March. I think the same question came again, but give a different meaning, right? Okay, now I have a question. Right, what is the correct answer for this? This is a model question I prepared for you all. What is the correct answer?
D.
Huh?
D.
B.
D. Last answer.
Yeah, good. Why? It is not cover. That is the one. Now, even though you don't know the answer, you can select. If you know the CDD is covered under Financial Transaction Reporting Act, no, it is not covered under Banking Act. Therefore, CDD can be used as a proactive management tool. What do you mean by a proactive management tool? The proactive management tool means if something happened, before something happened, rather than it's a reactive, it's a proactive rule, right? If something happened, so CDD is there to prevent that, right? So therefore, CDD is a proactive management tool. And also, it is an investigation to manage the risk. Of course, you know the fight for money laundering. Right, now today, we are going to discuss with you another important area, right? I may covered the financial customer protection. Now next week, I don't know, I told Geeta to already emailed you the next year's due also. I don't know whether you got it. No, it's a word document. No, right, doesn't matter. So I make a humble request from you. So next week class, don't try to miss it, right? So please go through your. Now I think tomorrow they will send you. Even I don't know whether they have already sent you. It's a Word document. right? Now, in our exam paper, the question number two, is basically is some sort of a mixture of little bit of marketing and also not marketing per se, but it's a customer protection questions. The question number two. Now, question number two, I think some of you have been going through your question papers, right? Question number two in our paper is sort of a mini case study, right? It's a sort of a mini case study. So what do you mean by a mini case study? So they give you a para, right? Now, for an example, I will tell you. For example, let's see whether this year's question, right? This year question. Now, this year's question. Now I will read the question. Before I move into this, I want to tell you something, right? Now, customer satisfaction is a key to growth of business in a financial institution. Hence, it is imperative to identify how a customer dissatisfaction incident and marketing incompetence would affect the service of such institution. Briefly state the customer-oriented solution for each of the following incidents by identifying the inconvenience caused to them. Right? That even though it's sort of a marketing, but it's not a marketing per se, but the approach should be a marketing oriented. But they are basically checking the risk management and customer protection. Right? Now, first question, usually it comes to, right? Question number two. Now, for example, I will tell you the question. Question 2.1. And mind you, this is and they have an easy to earn marks, right? Lot of students usually answer this type of question because it's very difficult to examiner to without giving any marks. At least you put something, they may need to give you 2-3 marks, right? There won't be any specific. There are, but not exactly correct answer. Right? Now, see the first one. Now, I will read that question, right? 5 marks. Mr. Tilakaratna maintains a current account with CBC Bank PSC for the past 10 years. And he receives his salary on 25th of each month through this account. He has arranged standing orders for his children's school fees, utility bill payments to be effected on 26th day of the month from his account based on the receipt of his salary instead of drawing checks. Due to a delay in transmissions, his employer has faced to transfer the salary during the month of January on time, and the transfer of funds has been effected on the 5th of February. Right? The CBC Bank PSC has reversed all the standing orders payments due to lack of funds in the account, and Mr. Tilakaratna has received several calls from the beneficiaries due to non-receipt of payments. As a long-standing customer of the bank, he is not happy with this situation. As the bank manager, propose the action you could have to taken to ease this situation. Now, that's sort of a similar mini case, right? Now, you know the incident. Now, you as a manager, you try to give a solution. Actually, this is something operational thing, right? I mean, if you're really working in the bank, it's very easy to answer. But even not working, no problem. I will explain to you. This is customer protection, but you need to incorporate some marketing words there. I said apologizing the inconvenience caused to you. So one point is there. I will tell you now. Like this, from 2016 onwards, right? Mind you, from 2016. All the questions from 2016-17, right? Like this, I have emailed to you in your note, right? So next week there won't be any PowerPoint presentation, but there is some note. Is there note number 13, right? All the past question papers like this, like question number 2 there. Okay. Understood? So if you like, I think I can't, it is it's not a grade 7 8 class. No. So what you need to know or do, right? All the questions are there in one piece of paper, maybe around 3 6 papers, right? 3 6 pages. Now what you do, so please go through the each and every case. At least you try to jot down answers what you feel. Now to answer this, the present knowledge is enough, mind you, right? To answer the question number 2, usually come with the question number 2, right? All the in your papers, question number 2 is that sort of a question, right? Now try to, now say for an example, this question is came on last January, right? Now the same question comes. Now, if you want, you just put down this weekend what maybe if the questions come to me as my exam, what I'm going to write. So jot down 1, 2, 3, 4, 5 points. Possible, you try to do all from 2016 or 17 onwards, 17, 18, 19, 20. But there may be at least 7, 8 questions in your paper. So try to answer, jot down. Then next week, what I've tried to do, I will try to explain what sort of answers you can recommend to them. Okay, so therefore don't miss next week class, and it is more fruitful for you, more benefited to you, provided that you may also try to answer rather than waiting me to give you the answer. I'm not going to dictate the answer, but I will tell you, so these are the points. I will get support from you. I need a good sort of a feedback from you. Now in this case, okay, now what do you need to understand from this? He is a guy, for an example, right? He's maintaining a current account, right? He will send his school fees and utility payments from his salary remittances. Now salary has not come on the same day. It came but little late, right? And then you usually run the standing orders automatically. No, you don't know, right? There are obligation for two parties, because Mr. Tilakaratta also got the feedback. Not so they are not received the payment. He may communicate it to the bank, and it's a bank also duty to do something. But because of his is a long-lasting customer, right? If you maintain a current account, what the bank can do? Something. A small suggestion. I'm not going to discuss in detail. Small suggestion in this case, since he's maintaining a current account, the salary is remitted to his current account. That money hasn't come anyhow. So maybe the money in his account is not enough to pay the run your standing order. What?
Provide overdraft facility, sir?
Yeah, correct. What sort of overdraft?
Temporary overdraft.
Huh? There are 3 types
TOD.
of overdraft we discussed now. Can you remember? Now the 2 are what? 2 are requested by the customer, right? TOD and POD requested by the customer. But there's another OD we discussed. What is, how you call that OD? It's called, now you can't remember, no? Casual OD. So manager can initiate his own, because of the long-lasting customer. Manager also can initiate some sort of OD. Right? Okay. Look at the case note also if you have time. So don't worry. So we will discuss the answers for this. Okay. Right. So then only you get more benefited. Otherwise, I will tell the answer is, I mean, no point. No. So you need to contribute. Then never forget. Now, these type of question, repeatedly comes in different ways. If you know the basics, easily you can answer for any question, right? So we'll do, it's a very good class next week. So now I think tomorrow they will send you I have already emailed, morning already I'll email to Geeta, the girl who is attending to that. I don't know whether he is there, and she may definitely Monday they will give it to you, right? Don't wait till the last minute. Take the printout, go through the questions, right, and try to answer, right? You refer your notes if you want to see some, no problem, and then I will dictate, I will give you my answers, then see whether your answers are correct. Sometimes your answers may be better than my answers, right? Okay. So that's a food for thought, and that's for the next week. Okay. And then we may continue the balance one, right? Okay. Then we going to cover today. Going to be the last day. I mean, last day for this customer protection, right? So today we are going to discuss little bit. Today you need to write little bit, right? Okay. Prudent risk management of financial institution and customer protection. How, if your organization manage your risk, right? How the organization manage their risk, how it benefited for customer protection, right? What is the relationship between prudent risk management of a financial institution and a customer protection? And again, I'm keep on telling you, I think usually in your commercial bank, you may ask question. Commercial banking, they may ask you, name the type of risk. Name the type of risk, right? You know what are the type of risks. So we look at this risk from the customer's point of view, right? Okay, let's look at it. Now, what are the major risks that both financial institutions and financial customers face? Both, remember, so we need to look at it always the risk from the customer's point of view as well. So there are major risks both financial institutions and financial customers face. What are the risks? Credit risk, liquidity risk, market risk, operation risk. Those are the four main type of risks. When it comes to DAB wave, you may learn a lot of under risk, right? So these risks are highly interdependent. Now, what do you mean by risks are highly interdependent? So that means, so highly interdependence and dependence mean, so the liquid risk is depend on the credit risk. Now say for an example, now say customer bank is facing credit risk. Bank is facing a credit risk because by the loan taken by the customers are not paying back. That's the risk faced by the bank, right? Because that's a credit risk. Customers not paid their loan arrears or loan installment. That's a credit risk. Now, as a result of that, so bank may face a liquidity problem, right? Why? Because banks don't have enough money coming from the loan customers. So therefore, the bank is facing a liquidity risk. Now, you see now how a credit risk is interdependent on liquidity risk, like, right? So all risks are therefore interdependent. Right. All banks set up dedicated risk management division to monitor, manage, and measure these risks. So you are well aware, in your bank, you may have a separate risk management division. There may be a CRO, Chief Risk Officer, right? All the banks, you have a Chief Risk Officer. So their job is to identify all these risks and try to come up with some mitigation solution, right? In order to mitigate, or you cannot totally eliminate risk. I think you understood, right? So you cannot totally eliminate risk. So what you can do only what? Control or mitigating. Cannot eliminate, right? So there are some products and some policies are there to mitigate such risk. Now, example, various derivatives we learned. Credit swaps, interest rate swaps, I think you have learned somewhere. I'm not going to touch much on that, right? And some insurance policies, mortgage protection policies are there to mitigate some risk. Okay, now say for an example, import bill. So you are entering to the forward contract. Is some sort of a mitigating certain risk. That is what risk? Foreign exchange risk, right? Okay. Now we're going to take one by one, very, because you are going to learn commercial banking. But I am not depend on the commercial banking, but I will tell you what is operational risk. Now, the risk of monetary resulting from inadequate. Now, operational risk may be risk of monetary. Resulting from a inadequate or failed internal process. So there are three ways organization operational risk can take into place. One is due to some problem with your internal control processes. Right, within your internal control processes, there may be a problem. There may be a leading to operational risk. Second one, because of the people. Now, people mean the sense the people who are working, like you and me, is employees, right? Because of the employees of the organization. So, organization can face operational risk. Then because of the systems like, IT system, management systems and like that, right? So because of that also can give rise to operational risk. But the other one is what? Third one, because due to some internal event. So there are four reasons operational risk can be raised. One, due to poor internal control process, because people, systems, and external event. Right? Now you know circumstances how the operational risk can evolve. Okay, then you look at the market risk value. What is market risk? The risk in movement in the price functions of the financial instrument. Right? Okay, because of the changing of the interest rate. Interest is going up, interest is coming down, right? So because of the fluctuations about the interest rates in the market, or maybe due to price differences in the market, share prices and all, increasing, coming down. So therefore, the customers as well as the financial institution can face market risk, right? Okay. Third risk, another famous risk, because that is credit risk. Because of the default on a debt, and remember, I don't want to further elaborate. Delay payment also credit risk, right? A guy who paid late also some sort of a risk. But basically, I'm referring here the default. Now, somebody has taken a loan, right, and failed to make required payment, also can be considered as credit risk. And how customer face this credit risk? Because customer, right, say for an example, because of the bank customer credit risk, so bank may not have money, they cannot in a position to get the full installment of loan. That's another issue, right? So these are the main four risks, right? Credit risk, and it is something is missing, no? Here, liquidity risk is missing, no? Oh my goodness. So liquid risk also there. So please write down here the liquid risk, right? Liquid risk is missing, no? Right. What is liquid risk? So when the bank is not in a position to obligate their payments, is called liquidity risk. Liquidity risk is missed. I don't know how it's mixed, right? Okay. Put down the liquid risk also. Right. Okay. Liquid. Put down the liquid risk also. Right. Bank is not positioned to pay their dues, and that is called the liquidity risk. Right. Then we have what are the other risks? What are the other risks customer can face? Now these are four main risks, but there may be you just now information risk. I will explain to you what are the information risks. Now, the information risk mean customers are not given proper information to the bank when they are going to take a loan. They not disclosed properly, right? Now they won't tell you I have a loan from this bank as well. Then I have defaulted that. I am not going to tell you everything. No. So because of that, so bank may believe what the customers is telling. That is why when you're granting a credit, customer interview is important. When you're granting a credit, custom interview is important. Why? Because if you're purely based on the document, the loan application form, so you need to believe what the customer incorporate and the loan application. So therefore you are exposed to the information risk. So he may not tell you the correct information, right? So therefore you need to interview. Then while you interviewing, now say for an example, I will tell you a small example. Will you? Now you say you want to get some loan from bank, and you say you have you list down how many kids you are having. 3 kids, all are school going. What school they are going? Private schools, right? Then they show your expenditure, no normal expenditure. They put a so small amount, right? Then you can ask from him, how can you, so why you are not incorporate which school your children are going? All private school. So you know the cost of the private school for month. So definitely there is some amount. So you can cross check. So you can ask them to adjust your expenditure, monthly expenditure, right? So like that, there may be an information risk faced by the banks, right? Not diverting information. As well as the customer also face the information risk from the banks. How? Because customers are not get proper information about their product features and all sort of things. Right. Then you know the confidentiality risk. Now the customers may facing problem with what? Divert certain personal information. Then the fraud risk. Now fraud risk because of the customers as well as the employees. Right? Then you have the event risk also. So what do you mean by the event risk mean? Now say for an example, now event risk, right, where you cannot control. Now example for event risks are factors contributing to political, factors contributing to economic, factors contributing to litigation, right? All can be considered as events or reputation. All can be considered as under event risk. Now, classic example. What is the risk customer can face? Forget about all. Now, I'll ask you a simple question. Suppose if you put the money in the bank, if you deposit some money in the bank, in your savings account, right? What is the type of risk you are going to face? Can anybody tell me? Can anybody tell me? What is the type of risk that you are going to face? Now say you put 100 rupees in a savings account. What is the risk you are going to
Economic
face?
risk, sir?
Huh?
Economic risk?
Yeah. How you call? Yeah, correct. Economic risk is correct. What is the real word comes under the economy? Now bank give you 4% interest rate. Right? Bank give you 4% interest rate. You put 100 rupees. What is the risk in terms of that you are going to face? Can anybody tell me? No idea. Right? What's the problem? Now this year you say, now you know the story. No, I want to tell you the story. Then you will never forget, right? Okay. When you go to the what you call famous country who's playing cricket, who's playing the cricket in African country, Zimbabwe, right? Zimbabwe. You know, there's a famous story when you're going for a haircut. When you're going for a haircut, they agree this is the amount I'm going to charge from you for haircut. Okay, say for example, Zimbabwe dollars 5 for an example, right? 10 will you take? Then in the middle way while you are cutting, now suddenly the barber stop, haircutter stop your cutting here, and he said, now from this onward, I'm going to finish your hair cutting. I can't do for $10. I need $20. What do you mean by that? Huh? So ultimately you started with the $10, but we finish it maybe $20, $30. What is the incident called? How you call that incident? Huh? I read that. So that means that is why, because the certain things are changing very rapidly. What is that? Sri Lanka also going to face very quickly on that situation sometimes because of due to certain economic factors. What is that? How you call that risk?
Hyperinflation.
Inflation risk. Good, right? Inflation risk, right? Because inflation is gone down. You put the money for 100 rupees. You are giving say 4% of interest rate. Now suppose your inflation rate is more than the interest rate. Clear? What is the value of 100 rupees now? Less than 100 rupees now. Despite the fact of what? Your interest rate. Why? Your inflation rate is more than your interest rate. Clear? Understood? So that is a type of event risk going to be faced by the customer when you're dealing with bank. There are some other risks we are going to discuss, but mind you, there may be a inflation risk also impacted your deposits, provided that inflation is more than what? Saving rate. Okay, right. Next, of course, the security risk. What are the security risks mean? Usually you face, we call cyber security risk, right? Now you know the present day the banks are operating in a cyber world. You know, we all are working in a cyber world. The most of the transaction processing systems and using the delivery channels are, lot of banks are now open to apps and internet. So therefore, these are subjected to various cyber attacks, like hacking, distributor denial of services, malware, social engineering, phishing, and things like that. I'm not going to tell you all these things because you are supposed to know and also to learn under commercial banking. Right? It is covered, still not covered. Can anybody respond to me, Buta? Still not covered the cyber security risk? Not yet. In your commercial banking? Huh? Cover kalada? No idea any. Kata කරන්න තාම නැද්ද cover කළේ? No problem, but you're going to learn. But you, if I have time, I will explain all these type of risks, right? What is hacking? You must be knowing, no, malware is a software packages problem, social engineering, enter into your email and changing, phishing, you know. Okay, right? These are some of the things. These are the risks of both customers and institutions are facing. Because now we are going for a more digitalized, so the cyber security risk is also increasing accordingly, right? That's a major issue we are facing with the technology as well as with the digitalization, right? Now, so you know, now you have identified little bit of you identify the type of risk, right? We have some knowledge about risk. Okay, do we have some knowledge about the risk now? Kiana Buddha, I need your feedback, right? Are you having some knowledge about the risk? What is the risk we are facing? What are the major risks we are facing? Operational risk due to what factors? Due to people, due to unforeseen events like the external events, maybe internal control issues, or maybe due to sound systems issues. As a result, we come across some operational risks, right? The credit risk comes because of customers are not pay their dues, right, and delay in payments. All will come into the credit risk. Then the liquidity risk means the organization not in a position to pay your dues as when the customers are requesting, or financial obligation, the short-term financial obligation. My goodness, not now I have taken out. You cannot see the tubes, Uta?
No,
Huh?
sir.
අනේ ඉතින් ඇයි මෙච්චර වෙලාවක් හිටියේ කියන්නේ නැතුව? ස්ලයිඩ් මොනවාක්වත් පෙවුන්නේ නැද්ද? Huh? Puta? No, you cannot see slides. 1 minute, one.
Can, sir.
Huh? No?
Now can.
Now can?
Yes.
Once you put it here, you cannot, no?
Yes.
Now you can't. Can you see? Can?
Yes. Yes.
Can or no?
Can.
Yes, sir. Huh?
Can see.
Can see. Then I got a chat saying cannot see කියලා. Puta, I got a Kulini. Can you see now? Kulini, can you see?
Can see now, sir.
Right, okay. So I don't know why this.
Again, not able to see.
No, I have taken out now. Right? Now it's okay?
Now okay, sir.
Right, okay. So, right, we'll go on these slides, right? We go like this, right? Now I think you're in a position to see now. Right. Okay. Now we have seen different type of risk, market risk, credit risk. You know, the markets may be due to price fluctuations or price differences or interest rate differences, right? Then I'll discuss the information risk. The customers are not given full information. Bank also not provide correct information to the customer, and there may be a confidentiality issues and the reputation. There are the fraud risk, event risk, and security risk. Right, so very basic. There are so many systemic risks, right? But don't worry about much of things in your level. That is more than enough. Okay, I'll just give you a basic framework about the risk assessment. Right, any organization. Now, I told you, according to the Central Bank of Sri Lanka, all the registered finance companies and banks in Sri Lanka need to have a separate risk management division in your organization, right? I think corporate governance also you may need to learn under commercial banking. According to the corporate governance instruction by the central bank, so it is a duty of our board of directors to have a proper risk assessment or risk management, integrated risk management system to be placed in your bank. For that, we have a board subcommittee called Integrated Risk Management Board Subcommittee. So those things you are going to learn, right? But for just to understand only, I also briefly touch about the risk assessment. Right now, we are facing different type of risk, as I explained to you a little while ago. Now, what are the main? So, what do you mean now? In theory, in practical, we say good bank. We say this bank is very good. But in technically, what do you mean by a good bank? Good bank mean the bank who manage their risk very efficiently and effectively. or properly. So that is, we call them as a good bank, right? The bank which manage their risk properly, we usually call it a good bank, right? Okay, the risk assessment generally include three key elements. One is, first you need to identify the risk. What is inherent risk organization face? Now, example, I will tell you example. One of the risk is credit risk. One of the element of the credit risk is, we can say, high NPL ratio. My goodness. Right? That means customers are not paying your dues. So then assess the likelihood and significance of the inherent risk. As a result of that, to what extent the organization is going to face or impact of this. Now, you know, if the customers are not paying your dues, then NPL has gone up. Accordingly, we have to allocate, we need to provision the money for those risks from our, from capital, or from our, from our profits, right? So we need to understand how much, what is the impact of the risk we need to calculate. So there's a way of calculations, right? So you will learn when you go up to top up into the ladder, right? In banking, I don't want to explain all these things, right? Then you may take how to mitigate such risk. So these are the three usual key elements or key steps in risk assessment. Identify risk, what is the magnitude, what action you're going to take. Right? අපි ලෙඩක් කොලා කරන්නෙත් ඒකනේ ඉස්සෙල්ලාම ලෙඩේ මොකද්ද බලනවා නේද? Right? ඊට පස්සේ අහනවා මේ ලෙඩේ කොච්චර බරපතලද? acute ද? මේක තාම මේ danger අවස්ථාවට ගිහිල්ලා නැහැ. නම් අපි eliminate, අපි දැන් බලා ගන්නවා situation එක. ඔයාට මේ පුංචි not දෙකක් තියෙනවා, ගෙඩියක් තියෙනවා කියලා අපි හිතමු ඔයාට නෙමෙයි හොඳේ. කාට හරි තියෙනවා කියමුකෝ පොඩි cancer එකක්. Do you identify the risk? Now you need the magnitude. මේක දැන් අමාරුයි, මේක උඩුදුවලා. නෑ තාම මේක පුළුවන් චුට්ටයි. මේක පුළුවන් ඔපරේට් කරලා අයින් කරලා දාන්න. අන්න you identify the impact and then you try to mitigate. Respond කරන්න ඕනේ ඒක අයින් කරන්න. Right? It's okay. Then ඇයි අපිට එහෙම කරන්න පුළුවන් උනේ? What action you can take because you have identified the risk. So therefore these are three steps. So the good risk assessment, therefore, requires the input from various sources. Now, don't confine only to the risk management division, right? So the risk assessment, risk department need input from various sources, right? From different people with different knowledge, right? We need different skills, different perspective. Now you see, when you go to certain doctors immediately identify the some risk because they have knowledge or may have some skill, or some people need to take some reports, right? Medical checkups, scanning reports, whatever they take now. So from that they analyze and they identify. Okay, so that is basically a risk management. And you know, therefore in an organization, accounting or the financial people, right, and they are very much familiar about this financial reporting. They know what are the internal controls as well. Then non-financial business unit need to be support with their activities, day-to-day operations information. Legal and compliance personnel can provide where the organization can go risk. Internal audit, the people who find out risk, right? So there are a lot of parties can provide information, and then we can take some initiative to prevent any fraud risk management. Right? Okay, so that's a simple thing you need to understand. Okay, another important things I'm going to explain to you now. How does good relationship with the customer promote risk management in financial institution. Now the question is, how good relationship with the customers promote risk management of financial institution? Now this question is telling how a good relationship with customers. So suppose if your customer, if your organization have a very good relationship, your bank have a good relationship with your customers, so you can manage your risk in the bank. Now let's look at it how. Right? First, so the good relationship between financial institution and customer creates confidence and trust. That is the very fundamental thing we are learning from beginning. Why banking business is depend on what? Confidence and trust. Right? So therefore, if you have a better relationship, so you may promote prudent, risk or management of risk, right? Okay. So then each other which promotes integrity each other. Basically, so as a bank, we need to maintain our integrity, and customer also indirectly integrate. Right? So both parties have a better relationship, trust and confidence, right? Then it create the integrity. So therefore, no risk in money coming from the both ends, right? So the major causes of most of the wreck is lack of such trust and integrity. So the trust and integrity play an important role in relationship, right? So if customers and financial institution behave well each other, both will comply with own obligation and duties in times. Okay, so therefore there's no risk involving, because customer, once they take the loans, they try to pay you. So there are no liquidity risk. No any credit risk. If the banks do the same thing, there won't be any liquidity problem. Right? Now, example, key risks such as credit, as we explained, liquidity and operational, arise due to non-compliance of such obligations and duties. If customers behave well, they tend to pay loan installment in time and deposit withdrawal in orderly manner. They are not going to withdraw the money exactly at once. So bank going to face. Suppose the customers have come and asked the withdraw the entire money, suddenly customer face, bank is face what sort of risk? High risk about the liquidity, bank not having money to give. So both has to pay their roles, meet their obligations, right? Third point, financial institution interact with treat well customers. Right now, what in return? Customers also expect a well treatment from institution. So therefore, you develop a better relationship. So therefore, customer relationship will promote the risk management in the longer term. Now the examiner will ask from you something similar questions like this. How customer relationship promote risk management in the bank? Right? How to answer that question? Suppose the examiner asks you, how customer relationship bring the promote risk management in the bank? So then you need to say certain the type of risk. There are different type of risk faced by both organization and the customers. You can say, we don't explain operational risk, blah blah blah, right? Right. Then you can say the banking business, the relationship fully depend on but customer trust, confidence, and integrity. If both parties, right, show others, each other their integrity and trust and confidence, then do in businesses, So such incidents like credit risk, the people who take loans tend to pay you money at the correct time, right? If the customers are treated well, they're not going to withdraw the money at once. Therefore, you can avoid, right, to into a greater length, the removing of money and paying their debts. So then there won't be a credit risk, liquid risk won't be arising. So therefore, good relationship with the customers can fundamentally promote the risk management in the long term, right? So this is how, if the questions come, you need to frame your answer, right? Okay, now we are going to look at it some points. Okay, now do you identify how do you identify whether your organization, your financial organization, conducting or having or operating in a prudent risk management system in your organization, right? Okay, for that we have some indicators. Now, how do you know whether your body is doing well? You have no any sort of a problem, health condition. How do you know whether your body, you are not suffering from anything? So you do some risk. Then you check cholesterol, good levels. Then you check sugar level, no problem, no sugar. Then you may check, all say urine test. There's no problem. Then you take, D testing. Vitamin D testing. A lot of people now having D problem, vitamin D problem, and there are testing for that. Then they have then we have another test called for checking your there are different tests available for you to check your body, right? So that from that information indicators, they tell you, okay, you are good. So that means you are prudently manage your body risk, right? Likewise, the financial institution have some indicators, right? To check whether your organization prudently manage their risk. One is the financial indicators. Now, example for financial indication is none other than very famous NPL ratio. Then NPL are the loans that repayments falls overdue certain time period as prescribed. Now, I think you may know how to categorize your loan portfolio on NPL frame, right? We have 3 months or 3-month installment, for example, we say special mention, right? Okay, right, provisioning, bad debts, and so likewise we can categorize NPL into four areas, right? Okay, so I don't want to explain that. I think you are well aware about how to classify your NPL ratio, NPL portfolio, right? So suppose if you don't have low NPL ratio, how you calculate your NPL ratio? Loan, customers not pay loan, total granted loan into 100. Simple, no? Right? So low NPL ratio mean your organization maintaining a good credit risk, right? Good risk management. Your credit risk was very well managed by your organization if you have a very good low NPL ratio. First one. Second one is highly liquidity ratio. Now, liquid ratio, as I explained to you, is a liquid asset is a percentage of total liabilities excluding the capital. So, higher liquid ratio shows liquidity as funds are available to meet the financial obligation. Okay, now if I ask from you, I don't know whether it is correct to ask from you, what are the mandatory liquidity ratios a bank need to maintain as per the central bank guidelines? Can anybody tell me? Every bank need to maintain minimum levels of certain ratios of the liquidity. That is central bank guideline. Can you tell me 3 such liquidity ratios your bank need to maintain? I have already informed you under soundness of financial institution. One is liquidity ratio. You need to maintain minimum of 20%.
Reserve ratio.
What is the other one?
Statutory reserve ratio.
Okay, take that also. Another one?
Capital adequacy ratio.
Rather than a capital adequacy ratio, for that, for how you manage your capital, right? Liquidity. Then Basel III introduced 2 new liquidity ratios to be maintained by the bank. How you call that? Recently, so the Basel III has introduced new 2 liquidity ratios to be maintained by the bank. How you call these 2? One is liquidity coverage ratio and net stable funding ratio. හරිද? ඒවා පුතෝ ඉගෙන ගන්න ඕනි කොමර්ෂල් එකේ. හරි සර්වේ හරි. කමක් නැහැ, right? මතකයිද? නෑ? Liquidity coverage ratio you need to maintain 100%, but because of corona it has come down to 90. Now short term additional some loans, right? Okay, so these are the things you need to know for that. So you have to learn those from other things. Okay, doesn't matter. Third one, low negative short term asset liability maturity mismatch. So that's also what's that? What do you mean by asset liability mismatch? Oh, remember, I want to tell you very simple this. All banks in Sri Lanka have a problem. Maturity mismatch. Right? Now, what do you mean by a maturity mismatch? Basically, so banks are facing maturity mismatch issue. Liquidity matches a maturity mismatch. What is the why banks are facing? Because banks take short-term deposits and give long-term loans. There's always asset liability mismatch, no? Because customer come tomorrow, we need to pay him. But the money we have taken from him maybe has given for 10 years housing loan. So there is always asset liability mismatch. Right? Negative mismatch means assets are funded by short-term liabilities. Liquidity at a short-term liabilities are frequently payable, not payable in that case. So the bank usually maintaining or managing their maturity mismatch. We think they are very prudently manage their risk. Okay? Right? එතකොට මේ අවදාන බැංකු ගන්නවා. ඒක බැංකුව කොයි විදිහටද ගන්නේ? කොයි විදිහට ඒක manage කරන්නේ? Right? So that is why called low negative short-term asset liability mismatch. If the bank show the low negative short-term asset liability maturity mismatch, so that means that bank is good. Low negative short-term asset liability mismatch. Right. Next one, as somebody told, is high capital adequacy ratio. Right? So if the bank show high capital adequacy ratio, which is supposed to be maintained by the bank according to the central bank directions, more than that, so that means so they are prudently manage their business risk. Right? So think of these 4 points. Now, what are the 4 points? Now we learn up to now. What are the 4 points? We call them as the NPL ratio, liquidity ratios, right? low negative short-term assets liability mismatch, maturity mismatch, capital adequacy ratio, and some more. What are these? Called return on assets that show the profitability. Stable moderate return on assets, right? That means RO shows the profitability. If RO is negative or if RO is high, it reflects high risk take ranking. If ROA fluctuating, risk management is not well. So therefore, stable and moderate ROA as per industry standards show good risk management. So we don't want negative RO also, and we don't want high ROAs. So we need a balanced ROE. With be compared with the industry standard, very stable one. So that means, so you prudently manage your risk, right? So that is stable, moderate return on assets. If your organization is maintaining, that means you are basically shows good risk management, right? Okay, then so these are some of the key points you need to go. Now, suppose the examiner asks from you questions like this, right? I'll just think on this ground, right? Suppose the examiner come and ask from you questions like this. A customer intend to deposits or do some transaction with bank ABC. Bank ABC. What factors customer may take into account, right? If banks are prudently manage their risk, what are the indicators they are going to be look at it? What's the answer for that? One, NPL. If you need small prescriptions, ideal. Second one, what is the second one? NPL, liquidity ratio. Third one, maturity, low negative, short-term asset liability maturity mismatch. Fourth one, high capital adequacy ratio. Fifth one, if the bank maintains stable, moderate return on assets. So from these points, I'm going to consider ABC Bank or whatever the bank going to be prudently manage their risk. That's then I'm considered as a good bank. So I have make my decision to invest my money in that bank. Okay. Now see how the questions come. They won't tell you these what are the factors contributing. No. The same question can ask if the customer expecting to do invest their some money in that particular ABC bank, right? So what factors you may consider as what factors maybe look into? Then you have to say, you need to say the good bank we usually considered as the bank who manage their risk properly, prudently manage their risk. In order to identify whether this bank is managed prudently their risk, there are some indicators are available. I usually go through some of these indicators. What are the indicators? As explained to you, NPL ratio, liquidity ratio, net. Then we look at the net asset liability maturity mismatch. Capital adequacy ratio and stable moderate ratio. If I found that these are accepted level, so I'll have no hesitation to go and do transactions or get involving in or invest my money in that particular bank, right? Fortunate enough, in the future, there may be a questions that come in like that. Right now, I think you in a position to answer. If a questions are come like that, how to answer? Okay, right. Next, okay. Now, can you tell me? This is a model answer I have prepared for you. Right? What may be the correct answer? Can anybody tell me? Credit risk of a credit portfolio of a lending institution depend on credit risk. ඒ කියන්නේ ණය දෙන ආයතනයක වැඩිපුරම ණය අවදානම ඇති වෙන්න පුළුවන් හේතු. What factors which contributing for more credit risk? එකම මොකක් වගේද උත්තරේ? What may be the correct answer? Can anybody tell me the answer? You can guess. Can anybody tell me the answer? Can anybody? Anybody?
A, sir.
A. Right. Then next one. Another try. Another
D.
try.
Last one.
Last one. Why you say last one?
Last one. All the
Last
above.
one. That means answer is D. Yeah, answer is D is correct. Why you select D? Because yeah, it can be due to deficiencies loan policies. The bank loan policy is very weak, so they have not given you correct of my goodness. Can you see me? I have lost the something gone wrong. One minute. Can you see the slides, Puta? No? Hello? Can you see the slides? Can you hear me?
No, sir.
1 minute, 1 minute. There's something gone. Give me a minute. I'll ask some boy to come and do the needful. Can hear, no? But can't see the tube, no? 1 minute. I will ask some boy to. Okay, till such time, can you move into the model question, right? What is meant by financial fraud? Right? I will. Hello, මේ අනේ ගෝලේ කියවනවාද මේක පොඩ්ඩක් මේ ස්ලයිඩ් එකේ මේ PowerPoint එක නැති වුණා. Right. Okay, can you hear now? Right? Can you write down, no? Till such time the boy comes. What do you mean by a financial fraud? We can't see only the slide. Can you hear now? Can you hear me? Can you hear me? Yes or no? Yes, right.
Yes,
Then
sir. We can
can
hear.
you,
Yes,
can
sir.
you can you put down answer? I will dictate till such time that boy come and do the needful. Can you put down this under that slide? What is meant by financial fraud? Please write, right? Generally, financial fraud means 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 stealing of funds. Stealing of funds. STEALING. Stealing of funds. Stealing of funds by engaging ENGAGING by engaging. What
Yes,
is meant
sir.
by financial fraud,
Yes,
right?
sir.
Now, financial fraud means stealing of funds by engaging in unauthorized actions, engaging in unauthorized actions or duties. Unauthorized actions or duties. Right? Unauthorized actions or duties. Right? Okay, unauthorized actions or duties. Now, okay, written up. So the financial fraud means stealing of funds by engaging in unauthorized actions or duties. Now, suppose some person try to take the money out from bank illegally or unauthorized way is called financial fraud. Now, put down this also. How many of you are aware about creative accounting? Can anybody aware about creative accounting? No, nobody is aware about what is creative accounting. Can anybody knows creative accounting? No? Okay, doesn't matter. Now you see sometimes in order to show investors, to get more investors to invest their money, some accountants, some financial guys may be shown high profits in their financial statement, right? In their financial statement, they show high profits, but it is not the actual true picture, right? But they are inflated profits have shown in their balance sheet or in their P&L to investors to invest their money or buying shares or whatever, right? So that sort of incidents we call is creative accounting. Nirmaniya ginum karani. Remember, that also comes under financial fraud, right? I think you may learn all these things when you go to the DBF level and some other subjects, but doesn't matter. So financial fraud is that, right? Showing high financial performances also can be considered as financial fraud. Not only stealing the money from unauthorized way, but showing higher profits in your financial statement also can be considered as a financial fraud. Okay. Okay. Now I will show you some small thing, but don't worry much on this, right? We call sometimes, have you heard about the coconut triangle? Huh? Can anybody know what is coconut triangle? No? In Sri Lanka? Matakada? Huh? What are the coconut triangle in Sri Lanka? Matakane? Hari, come on. So we have a fraud triangle. Hari, kammeli nede. We call fraud triangle, right? Fraud triangle. Now don't worry much, huh? Fraud triangle, right? Four triangles, right? For your understanding only, I'm just telling because it linked to the next one, right? Why people do fraud? Right? Why people do fraud? Right. First one, rationalization. හරි ඔන්න මම ගමනේ මතක් කි. දැන් එක ආණ්ඩුවක් ඇවිල්ලා කියනවා අපිත් හොරකම් කරනවා. ඇයි අපි හොරකම් කරන්නේ? ගිය ආණ්ඩුවත් ගැහුවා. හැබැයි අපි ගහන්නේ ගිය ආණ්ඩුවට වැඩිය අඩුවෙන් හොර වැඩ. අන්න රෂනලයිස් කරන්න යනවා. ඇයි ඔයගොල්ලෝ ඊට කියනවනේ දැන් මැනේජර්ත් වැඩට එන්න පරක්ක වෙලා. ඒ නිසා මහත් වෙනවා පරක්ක වෙලා. මැනේජර් පරක්ක වෙන නිසා. මැනේජර්ත් හොරා. ඉතින් අපි ගැහුවා මොකද වෙන්නේ පොඩ්ඩක් නේද? So that is what you call rationalization. ඒ නිසා ඔයගොල්ලෝ හොර කරන්න පටන් ගන්නවා. Right. Second, due to pressure. What is the pressure? pressure because of අයෝ ගෙදර ළමයින්ට කණ්ඩ නෑ මේ පඩියෙන් ජීවත් වෙන්න බෑ හරි වියදම් එතකොට එහෙම නැත්නම් මට ෆැමිලි එකක් ගොඩාක් ෆැමිලි එකක් ඉන්නවා එහෙම නැත්නම් මගේ බොයිෆ්‍රෙන්ඩ් කියනවා මම මේ වැඩ කරන්නේ බැංකුවේනේ තමගේ ගර්ල්ෆ්‍රෙන්ඩ් කියනවා ඔයා වැඩ කරන්නේ බැංකුවේනේ ඉතින් සල්ලි නැද්ද ඉතින් මට අරග දෙන්න මේක දෙන්න අලුත් අඳුන් අරන් දෙන්න අරවා ගන්න මේවා ගන්න so you are pressurized ඒ නිසා ඔයා හොරකම් කරන්න යනවා. ඔයගොල්ලෝ දැකලා තියෙනවනේ චිත්‍රපටි. You have seen lot of films, no? Some stories about the tele stories and all. What they said, why they kill, why they rob certain thing. My son is not well. He's in met an accident. I don't have money. He's suffering severe headache, whatever. And because of that, you try to do some frauds, right? Pressurizing. Third factor is due to opportunity. Third factor, due to opportunity. මෙන්න බැංකුවේ දැන් මේ අවස්ථාවක් ඇවිල්ලා තියෙනවා. ඔයා හිතනවා මේ වැඩේ කළොත් අල්ල ගන්න බෑ. යම් කිසි opportunity එකක් ඇවිල්ලා තියෙනවා මට හොරකම් කරන්න. දැන් සල්ලි ටික මේසෙ දාලා යනවා ගෙදර අම්මයි තාත්තයි. දැන් උන්න හැමදාම අම්ම ටේබල් එකේ අම්මා තාත්තා ඔෆිස් ගිහිල්ලා ඇවිල්ලා so you also sometimes you come and just put some money then and there so then your sons and kids and your brothers and sisters think and then you feel it there are enough money is lying there in the table then he's having an opportunity to take something out from that why you have provided opportunity for them to do that right so this what you call fraud triangle people do fraud due to these factors right the next question so organization also employees can do involving in a fraud because there's an opportunity prevailing in the bank or system so how can you control that and that is what you call we must have an internal control in the organization there is no opportunity for you to take the money out from the organization right so now let's look at it what do you mean by internal control right write down what is internal control right we have some times okay I need to cover so go a little quickly right what is internal control please write down under that internal control policies and procedures policies and procedures policies and procedures established and implemented policies and procedures policies and procedures established and implemented policies and procedures established and implemented to manage and control to manage and control a particular risk or business activity particular risk or business activity or combinations of same to which the institution is exposed institution is exposed or in which it is engaged is called internal controls right I repeat it again policies and procedures established and implemented to manage and control a particular risk or business activity or combinations of all to which the institution is exposed or in which it is managed, it is engaged, right? Okay, now you see why we have organization, rules, policies, procedures, right, to prevent any fraud activity. Those are we call internal controls, right? If you not have the internal control, there may be a possibility of people to go in and do some frauds, right? That is why you in the bank, we have a lot of internal controls. We call dual control. We're going to learn this later on, right? Okay, now let's look at what are the benefits of internal control, right? Now that will benefit lot, right? Then you protect your reputation. Customers like get panic, no? So protect proper reputation, and then protecting employee and resources, and reducing any errors, all can lead for the benefits, right? Have a better, right? So then next one, what are the main objectives of the internal control? Why an organization have an internal controls? 3 reasons. You can write down that also. First one, performance objective. Performance objective. Performance objective. So if you want, you can write down if you want. Huh? So why performance objective? What purpose? To protect the efficient utilizations of resources and assets. Efficient usage of assets and other resources, right? So that is why we need to internal control. Performance objective. Second type of objective is we need internal control for information objectives. For information objective, right? Why? To provide informations about your financial reporting, right, and things like that. Now you are going to learn again when you go for a DABF the importance of financial reporting, the proper internal control, how internal control facilitate for financial reporting, quality of the financial reporting, right? If your organization internal control is good, people believe nobody can't cheat, their figures and all things are good, right? Okay, then information objective. Third one, for compliance objective. Compliance objective. What is compliance objective mean? So your organization follow applicable rules, regulations imposed by your regulator as a general law in the country. For that, we must have internal control within your system for compliance objective. There are 3 objectives. One, performance objective. Second, information objective. Third, compliance objective purposes. Right? Clear? Right. Next, what are the risks of weak internal control system? Right. Now, if you don't have an internal control system, now you can say one thing is here. It's leading to financial fraud. One, it may have a financial frauds. Leading to financial fraud. There may be a statutory sanctions. Now, because it's a compliance requirement, that means our regulator, they come and watch whether a bank is not having a proper internal control, they can put sanctions to you, right? So, statutory sanctions. Then excessive cost. because somebody has taken the money, so unnecessary cost you need to involve, right? Excessive cost as well as misuse of assets and resources, right? Misuse of assets and resources. Okay, right. And put down the same thing. Key control activities. Key internal control activities. Samyak Vairidagan. Key internal control activities. Right? Internal control activities. Key internal control activities. Right. Okay. One. Separations of duties. Separations of duties. That is why we are giving what? Job description. Separations of duties. Separations of duties. Authorizations and approval. That is why we are giving approval levels. I can sign only up to 1 million, then it go to the AGM like that. Different people having different approval levels, right? Authorizations and approval level establishment, right? It's a controls, right? Third one, you can say documentation. So you need documentation, some documents for do something. If you got a loan, you need some document. You need a deed certificate, original survey plans. All those are documents you need for grants, right? If you want to give a loan against deposit, you need original certificate, right? Okay, then reconciliations. Reconciliations, right? Reconciliations, you reconciling your accounts, you do some controls. Right. And also inventory management. The stock. Right. Inventory management. Those are some of the key internal control activities. Now we see some of the, in your exam level, some of the internal control you are adapting. Right? You are adapting some internal controls. Dormant account. Right. Can you remember we learned dormant account? What is dormant account? The dormant account mean the accounts and organized customers are not dealing maybe 2, 3, 6 months given a particular period of time. The time may be depend on the bank to bank. Right. Now, how to handle the dormant accounts? So if the account become dormant, the system may be blocked. Then what you need to do, the segregate the dormant account mandates, separate under the custody of the senior authority. Now why I'm telling you all these things, I will tell you why, right? Segregate the documents, dormant accounts, mandates, separately under the custody of the senior authority. Then block the accounts in the system. Right? If the customer, if we want to reactivate or resetting the dormant account, you need owner's written request, right? Written request necessary, and also, and that has to be activated by another senior officer. So these are how you manage your dormant account. Now, if you really look at it, I'm not seeing in your paper, right? In your this year's exam paper, the question is asking, right, what are the measures taken by banks to prevent frauds in dormant account? 2 marks. What are the measures taken by banks to prevent frauds in dormant account? 2 marks. What's the answer? You can write one of these things. Block the accounts in the system, right? Some students have written all these 4 points. Still you get 2 points. But only thing is block the account, and the most important thing, activate only with the customer's written request with the senior officer's approval. Right? So you see 2 marks this process. The dormant account. Now you know how to handle the dormant account. So these are why we need to have things like that. From these dormant account, the internal people are employees. They know this document. The customer has not come for so many times. He can develop a person. He can activate a person like a real customer. And with the help of the internal people, customer can withdraw money if they don't have a control like this. Right? That is why we need to have these internal control procedures. Right? That will lead to what sort of a risk? If you are not handling your dormant account properly, what is the type of risk customers going to expose or banks going to expose? Can anybody tell me? Can anybody? Right? If you are not properly handling your dormant account, what is the type of risk the institution is going to face? Now we learned 4 types of risk now. Can anybody tell me? Can you hear me? Hello? Hello? Can you hear? Yeah, what is the risk, Kuta? Now the examiner asks you like this. Proper internal control measurement will facilitate to reduce the sum of the handling the dormant account. Having a internal control mechanism or dual control mechanism for dormant account, the following type of risk can be controlled by the financial institution. 1, credit risk. B, liquidity risk. 3, operational risk. 4, market risk. What is the most applicable risk?
Operational risk.
Operational risk. Why? This can be happen now. Operational risk can be taken place due to what? Due to people, due to system, due to unforeseen market external factor, and some liquidity. Right? So understood, no? Right. And that's if you questions comes like that, if you know the principles, easy to answer. Right, good. Then there's another risk methodology, opening and renewal of deposits accounts. Right? Now, what do you mean by a 4 eyes principle? That means now one person cannot open accounts, no? Right? So there may be a creator and approval. In your bank, you must be aware, right? Now, once you go for open an account, even for FD or close the account, open account, there's a procedure to be followed, no? First, you take the application form, mandate, then you fill the KYC. Sometime now you have the photo also, you take the photo also, no? Then you will prepare everything and have authorized officer to pass and he check, right? So all are creating a, right? So these are mechanisms, these are internal control. Closing the account, open the account, there's a policy to be done. Okay, you cannot alter any information, right? So there are some opening, renewal, accounts, dual mechanism, right? Then you have a credit management. Now, important for credit management. Why? In the credit management division, only you grant loans. Suppose the same guy check everything, it's a fraud. So that is why we have a segregations of duty in the credit department. I told you one of the internal control activities is segregations of duties or separations of duties. Why you have a different people in the credit department? Some people accepted the application processing. Some people will reviewing the borrower's credit worthiness. Right? Some people are deciding the credit limits. Some people are checking their legal aspects, the proof of their bonds as well as their property. Somebody go and inspect. Authorizations given by somebody, approved given by somebody, putting to the accounts like that. Why we have a different system? Because there won't be any issues are taking place in the credit. Okay, now you understand why we have a different segregations of duties to avoid any fraud, facilitate internal control. Right, next one. Now internal audit or independent review of the credit. Now I told you the credit, sometimes audit people come and watch, right? The valuations of securities all have done. Then another methods we call is how a system passwords. Now, if people you are working in the organization must have a passwords. So you are not supposed to, however you good, however your friend is good, don't give your password to another fellow. Right? So password, usually consists of 8 characters. There may be a 1, 2, 3, 4, 5. Then you have a question mark. Now characters are now strengthened. Right? Now make it 8 characters minimum, and the characters also having some numerical information, question marks like that also. And password also maybe usually we will change it. Right? Okay. Right. So new passwords to be issued. People use the old passwords to be renewed, because if some fraud took place, how the system will check who has done the transaction? That is the base for your password. So the system password also act as a control, independent control mechanism, internal control mechanism. Okay. Right. Now let's look at it. The next one, dual control. Now, what is dual control? Dual control means signing approval by 2 authorized officers, right? Based on different amounts involved in financial transaction. Now, if the customer come for withdraw the money, suppose you are at the counter, so certain amount only you can dispose. No, if you ask him more money, you have to get the permission from your senior officer. That's a dual control. Now, why dual control? It helps detect frauds, errors as well as non-compliances, and avoid frauds. Right? So the dual controls prevent fraud, make it irregularities. Right? That is why we need to have a dual controls. Detect frauds, errors, compliance, irregularities, right? All things. So that is why we have a dual control in an organization. Even for wallet, you must have 2 doors. ඉතින් ඒ උනාට ඉතින් අපේ wallet එක ඇරලම තමයි තියෙන්නේ dual control උදේ තමයි dual control නේ. ඕක ඇරලම තමයි ඉවරනකම් ඇරලා තියෙන්නේ නේ. But you are not supposed to do. Every time your wallet has to be closed. Now safety locker, we have a dual control. Customer has the 1 key, we have the 1 key. Right? Okay. So the smooth transaction with dual oversight will reduce conflicts and disputes with customers and will promote customer relationship and public control. If you have a better dual control systems or internal control system established your own organization, there won't be any problem. Right? Okay. Right. So the questions. in March 2016. Okay, what may be the correct answer for this? The internal controls are primarily expected to students. I can remember the students get little complicated with this. Some students have a problem to select two questions. What's the correct answer?
A.
Yeah, A is the correct answer. But some student may be confused with what? Whether is A correct or whether is C correct, right? Okay, but basically the internal control is to prevent fraud, right? Okay, now the same question. Now this is March 2016. Good, answer is prevent fraud. Good. The same question asked in September 2016. What is the correct answer for this? No, you have to be smart. That early answer is not there.
A.
Same thing. Prevent irregularities. Right? You see how the same questions come over and over again. Okay? Right. Now, I want to. Now, who are the people who are responsible for having internal control of your organization? Huh? Who are the people? Everybody, in this case, yes. From key management people, board of directors, auditors are there, the frontline people. So it is a duty of a board of directors, according to the corporate governance, right? It is a duty of board of directors to ensure that your financial organization, your bank must have a proper internal control system. It is a duty of your internal auditors to carry out investigations. So some important things, whether you are really your auditing function is we looking after the internal control aspects, right? Remember that. Okay, now I think you can answer to this. Now we have learned HR, remember? Okay, can anybody tell me what is meant by internal controls in HR? Okay, forget that answer, will you? What are some internal control mechanism used in HRM? Now, don't think internal control only for operations.
JDs to everyone.
But I can hear Sipita. What is that?
Provide JDs to everyone.
Yes, okay, good. JD is okay. Good one, exactly correct. Provide job description to everybody is good. Okay, what else?
Staff transfers.
Transfers, very good, very
Staff
good.
transfers.
Huh? Staff transfers, good. That's correct. Answer is correct. What else? We learned. What is that? Can you see my hand? Huh? Okay, what is that?
Job rotation.
Job rotation. Good. Job rotation. Very good. Another important one. Can you see now? Can you see my hands? Huh? What is this? 7? Right? 7? No, what is 7? Compulsory
Annual
leaves. That is, you reduce your operational risk. Compulsory 7-day annual leaves. Good. Right. And job description and segregations of job duties. Okay. Good. Now you see, so you have learned something there in HRM, all these things. right? Those are HRM, internal control mechanism used by the bank. 7-day, those are 7-day annual leave is an operational risk mitigation activity, right? 7-day compulsory annual leave, job rotation, job description, transfers, right? As well as you may have some disciplinary code also. Is an internal control mechanism, right? Disciplinary code, there is a way to handle your if you have done something misconduct offense, there is a way to handle it, right? So disciplinary code you can consider also as a good, right? I think you have something now, right? The most important thing I am going to discuss with you. Okay, risk that customers face when they deal with financial institution. Now say you as a customer, when customer want to deal with financial institution, what type of risk customer is going to face? 5 marks. Second one, what type of risk financial institution face when you deal with customers? Now remember, we learned products earlier. What are the risks faced by the institution and customer, right? Now this question is little different. What is the risk faced by overall when you deal with bank or financial institution? What sort of risks customers, because of customers, the financial institution is going to face? Okay, we'll first take what are the type of risk customers face with financial institution. Tell me one, right? Can you list down? Can you list down risk that customers face with financial institution? එකක් කියන්නේ අපි දැන් මේ වෙනකොට දෙක තුනක්ම කතා කරා. What are the risks customers are facing when you deal with banks? දැන් අපි සල්ලි දාලා බැංකුවේ මොකද කල්පනා කරන්නේ? අන්නේ මට සල්ලි හම්බෙයිද නැද්ද, මේක වහලා දායිද ද ෆිනන්ස් වගේ, නැත්තම් ETI වගේ මට සල්ලි හම්බෙන්නේ නැති වෙයිද? එහෙම හිතනවද? How you call that risk? What is the risk faced by the customer?
Security risk.
Okay, we'll take security risk. That means, so what do you mean by a security risk? No, I am referring. Now there are two ways for this. Now I think you may. What do you say security risk? You need to. Okay, even though I put a security risk, I think you may thought that security mean the safety of money. No, that's what you are referring. But okay, security is also there. Why? When you do transaction with the banks through your ATMs and all, you are subjected to what risk? Rather than security risk, how you call that risk? When you do with electronic gadget to businesses, what type of risk you are exposed? Yeah, what type of risk? How you call that risk? Now, if you go to ATM machine, right? And you try to withdraw withdraw the money through the ATM machine and come home, and suddenly somebody has taken your money. What type of risk you face there?
Cyber security risk.
Cyber security risk. Good. Cyber security risk. What type? Okay, that is when you are dealing with the bank, you are subjected to have some cyber security risk. When you take money from ATM machines and all, no? Even still, you without doing also, you don't know, somebody can hack your account and take the money, no? Then you are exposed to security risk. Of course, it's a bank, need to pay, but still it's a, because of your, say you lost your credit card or lost your debit card. Right now, according to the new rules, you not sign, no sign is required, no? Neither. Card ගුණොත් තියෙන පැට්‍රල් ගහන්න පුළුවන් නේ. නේද? සයින් කරන්නේ නැහැ නේ. සයින් කළා ප්‍රශ්නේ නැහැ. අපි ගහනවනේ මේ වගේ අස්සන නේ. So you are exposed to cyber security risk. Okay, what else? Now I told you morning what type of risk, what type of economic risk you are going to face. What type of economic risk you are going to face? Huh?
Inflation risk.
Inflation risk. Good. Now I'll read this year's question. Right? This year's question. Carefully listen to me, right? First question this year. What type of risk to a saver? What type of risk to a saver normally arises from holding a cash deposit? Now, a lot of students have put the wrong answer. Now, carefully listen to that. Read the question. Okay, now before that, I will ask you. I'll ask you something, right? There are questions like this. As a customer of your bank, what is your worry? What type of risk your bank, with regard to your bank, whether it's operational risk, liquidity risk, operational risk, liquidity risk, credit risk, or market risk? What is the risk you are worried about the banks when you deposit the money? Why you deposit the money? You deposit some money expecting a what? Expecting a interest plus your capital back. Right? If your organization is suffering a certain risk, you're not in a position to take the money back. What is that risk you're worried about the organization?
Liquidity risk.
Liquidity risk. Good. Now, that's a question came, that sort of a question came earlier. Now, people who did past questions, not study like this, they purely go through the past papers and they try to answer to this question. They put the answer as liquidity risk. Right? Okay. Now, I'll tell you the question. What type of risk to a saver normally arises from holding a cash deposit? A, capital risk. B, inflation risk. C, liquidity risk. D, institutional risk. But ඔය risk ගැන බය වෙන්න එපා. Institutional risk කියන්නේ ආයතනයේ තියෙන අවදාන. What is the type of risk to a saver normally arises holding a deposit? What is the risk out of all?
Inflation risk.
Inflation risk. Good. Now, a lot of students, because they have aware the similar question came in the past, right? They immediately put liquidity risk. But that is not the answer. Liquidity risk is more concerned about the institution. He is worried about whether I face bank collapse only have a problem. The bank face a liquidity problem, right? But here he's asking, he never talk about the issues, but he said, okay, when a saver deposit the money, holding a money in a cash deposit, what is the risk? As I told you, is a inflation risk. Okay, so then you can write here, same thing here. What is the risk that customer face when they deal with financial institution? One is you're facing what risk then? Right? Inflation risk. Right? Then you learn cyber security risk. You may face what? When you're dealing with financial institution, you may face liquidity risk. Why? If the bank collapse or bank not having money to pay me back again my dues, is you are facing a liquidity risk also. Clear there? Right? Right? So you are deposit the money, you won't get the money back. Right. And also sometimes cyber security risk. Sometimes you may charge hidden charges from the bank when you're going for a loan. Like that, there may be a enough and enough. Okay. Now I will give you some exercise also. Right? Now I give so many exercises. Right? Right. Now please take a piece of paper, try to answer to this question. And also I want to tell you, you don't want to mention reputational risk or liquidity risk as it is. You can use, but you have to explain. Now, liquid risk, why it is a risk to the customer. So you have to explain that. Why? Then you have to say the liquid risk arising because of the customer deposit the money with the bank, the deposit money cannot be taken back, or the bank not in a position to pay the deposits and the interest, the capital, and this when I was requested, the customer is requested, unrisking. There may be other enough risk. You don't want to use the technical words. You may use this all the things, right? Say charging high, some hidden charges when you're going to take the loans, right? And loss. Now say for an example, when you do for phoning, right? Now say when you do some phoning, right? What happened? So you may losing your valuable items because the bank has, after 1 year, they have given to they have selling, auction it. Oh, me the article what I pawned has given to another fellow. There are instances like that, no? So you can, whatever you come to your mind, right? Please write. Right? Take the piece of paper, write down what are the risks faced by customer when you deal with financial institution, as well as risk faced by the financial institution because of you. First one is, of course, the credit risk. There are another one, information risk. You are not telling me the correct information, as well as you produce the forged documents, right? Okay, like that. Think. So you will never forget, right? And write down. I will tell you some answers next time. So there are so many things next week to be done, right? Okay. And you know this question. This is in fact this year's question. This is in fact this year's question, right? A lot of students answered, but problem is they said operational risk, they put liquid risk. So what? They have to tell how this risk comes, right? Become operational risk කියන්න බෑ. කොහොමද operational risk ඇති වෙන්නේ? So then you have to say, right? Okay, you can create some operational risk. Employees of the bank may get involved in my money. So that's operational. You have to explain operational risk. That may be due to system failure, also an operational risk. No? Right? Again, the risk. Operational risk. How? Then you go for Sunday some shopping, and you need badly money in a poor day. Bank was closed. You go for ATM. System system was broken. You face a risk. Why? You cannot withdraw the money. So that also type of risk you are going to face, right? Likewise, list down maximum risk you can think when you are going to face when you're dealing with customers, with banks, as well as you think what sort of banks, what type of risk bank is facing, right? Okay, this is 10 marks question. This asks, they ask basically, I will read the question. I'll read the question. Right. Right. I will read. Discuss the risk that customers face when they deal with financial institution. 3. Identify the risk faced by financial institution when providing services to the customers. 5, 5, 5, 10 marks. Okay, we'll see with your existing knowledge how many. 5 points, 5 marks. Okay.
The second question.
This
Can you
is
repeat again the second question?
this is the same thing, Puta, here. Risk that customers face when they deal with financial institution. That's question number 7.1. Then the second question, the risk faced by financial institution when they provide services to customers. මේකම තමයි note එකේ තියෙන්නේ පුතා this එක කරවල තියෙන්නේ අග got it clear risk that customers face when they deal with financial institution 1 5 marks then risk financial institution face with customers when they provide service to customers. Okay, clear? Okay, Buddha, understood? Okay, okay, keep quiet. Harder.
Okay, sir.
Yes, sir.
Right, okay, so try to answer.
Yes, sir.
Right, then you see I may all tomorrow I think you will get it that question number 2, right? Try to answer maximum possible. So we try to answer, we are going to discuss and then we wrap up the customer protection, right? So you see you can answer any question, you can easily pass this my paper, right? Only thing you need to actively participate, try to do some exercise, then you don't want to remember all, you don't want to cram, right? You can be happily sit for the exam. Okay, so then see you on next Sunday and we'll do this question, right? Remember, if I'm not done to remember me to do that, right? I leave it for you to think and write, right? Then memorize and it recorded in your mind. And also go through tomorrow, go through your new note number 13. There are 5-7 questions there, including this year's question paper. Paper mean that 3 question number 2 mini case, and go through, jot down what you as a manager or as an operational manager, officer in charge in that section, what remedial actions or what solution you are going to give to the customer. That your answer must be a little bit of marketing oriented, right? Marketing oriented solution. On example එකක් කියන්න. ඉස්සල්ලාම බැංකුවෙන් වැරදක් කළාම මොකද කියන්නේ? First step, as a manager of operations or whoever, first I apologize the customer on that 1 mark, right? අපි මොන හරි වැරදක් කළා තියෙනවා නම් අපි apologize කරනවා, right? Apologize කිරීමට 1 marks. ඉතින් මේ students like ඒකවත් ලියන්නේ නැහැ ළමයෝ. So සමහර කට්ටිය easy. So apologizing is 1 mark. Why? Customer is king, no? Right? අපිට නොදකින් උනාට නේද? Right? Okay. So we see you on next Sunday and try to do a try to answer, and thereby we cover the customer protection. Then we start marketing, right? Not next week, maybe 2 weeks time. Okay, right. See you. Have a nice weekend, or rather week. Thank you.